it's Michelle. Thanks so much for joining. So today we're going to start our first part of our three-part series of why and when you should refinance. I am Michelle Fernandez, and I am all about helping you balance it all while putting your fresh face forward. And today I'm here with Deborah Reyes, who is Florida's best mortgage lender of the year, aka my mom. Say hello.
Hello, good morning.
Thanks for joining us. Now she's got 38, maybe a little bit more, experience in the mortgage industry, so we're definitely here with the expert to give you all the answers to your questions. So you're going to want to share this video with your friends, whether you own a home or some sort of real estate property or not, and definitely get the notifications for my live videos that are coming up so you don't miss the rest of the part of this series. And next week we're going to even be talking about purchasing a home. So let's get started. So can you please explain what is refinancing?
Refinancing is taking the equity that you have in your property and combining to get better terms and conditions for the existing financing that you have of your first and possibly second mortgage or home equity line of credit.
Oh, go ahead.
In addition, if you don't have a mortgage on your property, you certainly can do a refinance by taking cash out of that property, and that's also considered a refinance.
Okay, so when you refinance, does it just have to be on your primary residence, like where you live your day life?
No, it does not. It can be on an investment property, like a condo you might have that you have rented out, or a second home that you use as a vacation property, as well as commercial property. And commercial property is considered anything 5 units or more.
So this is great. So you can get better terms on any real estate that you own.
That's correct.
So would you have to go to a bank to do that, or can you go to a mortgage lender like yourself?
Yeah, you can get your financing from a regular institution, or you can go to a lender or a broker and see what options they have to offer.
That's great.
Yes.
That's great. So you have lots of options. Now, let me just ask you really quick. What would be the benefit of going to a lender like yourself versus a bank?
The good part about going to a mortgage lender or a broker is that they represent several different types of institutions and have a larger menu of terms and conditions and programs to offer, where when you go to one institution, then what you have is what they're offering themselves.
Good to know. Okay, so let's get into the nitty-gritty. So why would you choose to refinance?
You would choose to refinance after examining your short-term and your long-term goals. Short-term goals, do I need to lower my payment as low as I can right now? Do I need cash out for some immediate things like debt consolidation, or if you have children going to college? And your long-term goals are, how long do you plan on living in that property and or keeping that property? So those are all the questions you want to be asking yourselves before you start to looking at the terms and conditions that are available.
Okay, so when does it become beneficial to refinance? So now that I've looked at my goals and I know that, hey, I'm going to be here for a while, I'm paying a higher interest rate, I hear that the rates have dropped, so when do I know it's beneficial for me to do the refinance?
Well, you want to have all those questions answered, and then you want to work with your mortgage lender or your bank, whoever you choose to work with, and be able to give them those answers. And you want to have in front of you what you're currently paying on your first mortgage, second mortgage, and or home equity line of credit, and what your current interest rate is. And then they do something that's called a net tangible benefit. So we want to see how much you're going to be saving monthly. We're going to divide it into the closing costs, or the cost of refinancing, which can be, in some cases, included in the new mortgage. And then they're going to divide those two together and see when you have that break even, when it is cost effective to refinance. It's not always a black and white. It's different for everybody. And it's important that you know your short-term and long-term goals, because even though you might think, oh gosh, I'm saving several $100s a month, but you're planning on selling the house in 6 months, it doesn't make sense to do that, whether you're including those closing costs or not, because that's cash that you would have in your pocket 6 months when you sell that property.
Okay, so you talked about pulling money out, like whether it be for debt consolidation or college tuition. So then how do you don't, would you have that net tangible benefit if you pulled cash out?
No, the net tangible benefit doesn't work exactly that way when you're taking cash out for debt consolidation, but I would still do those numbers because if I'm paying $500 a month for my credit card debt and then I just lowered my monthly payment by only $100, but I'm also saving that $500 a month for the credit card, then you can really see how much the savings would be. Remember, you are financing it for a longer period of time, but it does help you immediately with that cash flow that you might need. Again, it's not the same answer for everybody. You really need to look at what's best for you.
Right, what kind of debt you have or what you're looking to. So that's good information. Hello. Okay, so here's the big question, because I know a few years ago, actually it's been more than a few years ago, time flies so quickly, when we all went into that horrible housing market and everything went crazy because anybody with a pulse could qualify. So nowadays, what does it take to qualify for your loan? In brief format, because I'm sure it's pretty lengthy.
Right. First, we're looking for the ability to repay the loan. Do you have the income that's documented that we can verify the source of the income and that you have sufficient income to cover not only your new home housing debt, but also the other reoccurring monthly debt? The second area is the willingness to repay the loan. That's where we're looking at how is your credit? Have you demonstrated through how you've been making your other payments that you have the willingness to repay the loan on a timely basis? And the third area is the collateral. That's the real estate property. We want to make sure that the value is there, that the equity is there, that the property is in good state, and everything is, you have a solid roof, etc.
So this is great. So to recap, if you want to refinance, the benefit is that you could either pull cash out for debt consolidation or to maybe use as college tuition, for example, or to get better terms, which would mean to be lowering your rate, or let's say you were in an adjustable rate or one of those hybrids that it's like fixed for so many years and then go into it adjustable and you say, you know what, rates are so great, let me go ahead and refinance and get a low rate fixed for the next 30 years if that's how long you choose to spend in your property. And then also we can refinance any real estate you own, whether it be a primary, investment property, or second home. So this is all great information. I hope it was very beneficial to you. Remember, we have 2 more parts to this refinance series. The next one is going to be about credit. And then the last one is going to be about collateral, which is the property itself, what you should be looking for, how you should prepare for your refinance. So you don't want to miss it. So make sure you go into the right corner, hit the drop down, get the live notifications, share this with your friends and family. And I will encourage you to private message Deborah for any questions that you have. You could do as me as well, and I'll pass you on to her. I'm going to put her Facebook link in the comments below, and she'd be more than happy to answer any questions, run that net tangible benefit for her. I'm volunteering her, but I'm sure she'd say yes.
Yes.
Whether you use her or not, I'm telling you, she's full of knowledge and is truly an expert and a great resource for you. So please contact her. And we will see you tomorrow.